Hi, and welcome to my final morning report chart appraisal on Tuesday, the 25th of April, with me, Richard Japan market analyst at Antic Markets, looking at gold. We've seen this corrective move on gold bounced actually formed on the day a fairly positive candle, but it's still in a bit of a corrective mode. I mean, the selling pressure has just returned slightly again today, and you look at the momentum indicators; they do look near-term corrective. With the RSI falling back, but still above 50. MACD line is crossing negatively, or crossing lower, I should say, and stochastics falling. So there is still a bit of a corrective move, but I still think look at this. I still look at this sort of breakout as a basis of support between 1261 and 1271, being all these sort of old highs from February and March, and so far we're sort of holding on to that. 1265.90 is yesterday's low. It's sort of drifting back, sort of now between within $5 of that. So yeah, we could see a bit of a test of that, but still I think that's a basis of support. Also, the long-term downtrend now becomes supportive as well. So you've got this sort of confluence of that, and also the 21-day moving average, which previously has been a pretty good basis of support, certainly from January, February. Obviously, not so much in March, but then sort of seems to be again a basis in April. So I think that you've got all these three factors, and I think there is still arguably a debate for having safe haven sort of portion in a portfolio, due to the fact that you've got all these uncertainties surrounding North Korea, Russia, Syria, etc., etc. So I think, just generally speaking, there will be a demand for gold, and I think just this is a little near-term corrective move that's likely to find support. Now, a move below, I've got the line here at 1239.50, these reaction lows from late March. I think a move below those would change the outlook. But generally speaking, I think a nice little buy zone between 1260 and 1270 really. If you lost 1240, I think that changes the outlook. But generally speaking, I'm still fairly positive that this is a near-term correction that will be bought into. So looking at the hourly chart, you can see that 1278 has become a basis of resistance in the last sort of week or so, and that is clearly the level that needs to be broken to the upside to regain a bit of initiative. 1288 above that is that reaction high from Friday, but just generally speaking, a little bit of a corrective move, but I'm not expecting it to go too far. So I wish you good luck in your trading today, and I'll speak to you again tomorrow. Thank you.